oil in the Middle East are back to driving the market again, and unfortunately, we didn't get a lot of great news. The 60-day ceasefire between the U.S. and Iran technically expired on Monday, but it hadn't really looked like a real ceasefire in a long time anyway. Oils climbed from the low 80s to almost $90 per barrel as the week went on, and the UAE suspended financial and economic ties with Iran over accusations that Iran fired ballistic missiles. And Trump said there's no talks happening right now, but he did make a threat of what he called would be the most crushing economic operation ever taken against a country if Iran does not come back to the table, which they've basically responded to with their own threats. Higher oil means higher inflation risk, and that's bad for mortgage rates. We did get one bright spot midweek. The Treasury announced it's doubling its bond buyback program, and that's going to start September 9th. They're going to be buying more 10, 20, and 30-year Treasuries each month, but the gains didn't last. By Thursday, they were gone, and part of the reason Treasuries needed the help is that U.S. debt just crossed $40 trillion. And traders are starting to question whether these treasuries are really still the safe haven that they used to be. When investors are demanding a higher return like this to hold our debt, mortgage rates feel that too. On the Fed, minutes from the July meeting did show most members still want to hold rates steady, and odds of a hike at the next meeting, September 16th, are just about 32% right now. Next Friday is the Jackson Hole Symposium. That's where Fed Governor Kevin Warsh will speak. If a hike were coming, this is usually where you'd hear hints, but Warsh has been intentionally less transparent, and that's his goal, so I wouldn't expect big headlines or a lot of information on what's planned. But jobless claims were fairly flat. ADP's weekly numbers did show the job market is still cooling, though. Only about 9,500 jobs added per week over the last month. And one number that is worth sharing with clients, home prices are still climbing despite all this, up close to 3% when you analyze it. That's a national number, but on a $500,000 home, that's $15,000 in equity in year one alone, and over $170,000 over 10 years. So waiting for the perfect rate isn't free, and I'm happy to run a cost of waiting analysis for you or for clients. Next week, we're going to get Case-Shiller and FA home prices. That's numbers for appreciation. We'll also get the PCE inflation reading, Q2 GDP, durable goods numbers, and the important Jackson Hole news. I'll see you next Friday to let you know what happens. Hopefully we'll have some better news in Iran.